Okay, good evening, good morning if you're calling in from China, Asia. Good afternoon from wherever you're calling from. We're gonna be looking at the weekly outlook on the different pairs that will be trading for this week. I've taken the liberty in looking at a few more, but if you have any requests, any pair that you want me to look at, during the course of the week, just send it in, or maybe after this session you have something that you want me to look at again. I will look at them. But I was just trying to say that we identified a couple of pairs last week. Eh? The one you No, 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 it's fine. Sorry about that. A couple of pairs that we looked at last week. We looked at Euro USD. Yes, on its way, hit our first TP, and it's probably heading towards our second TP it's um if it continues going down. But if it doesn't, it's all good. It will go back up, and that's not a problem. We are not the way we are trained. We are trained not to think unidirectional. We are trained to think multi-directional in terms of the way the market can move in different directions. We shouldn't just believe that it's just going to keep going down or it's just going to keep going up. It can change course at any point in time. The trick is always to be always prepared for the moves. So I think we looked at Euro USD. I can't remember where my chart was for Euro USD, but I think that moved as well. GBP USD as well. It's also on its way. They are pretty much moving in the same direction with Euro USD, and that's it. A function of the movement of the USD, the dollar index. Right now we can see the dollar index is climbing, so that is why we're seeing GBP USD and Euro USD dropping as well. GBP JPY. In fact, this pair has been interesting pair for me. I had marked this pair a couple of months back, because I think it was somewhere here, and I marked it that it was going to come back to this trend line. It came back to this trend, and from here I knew it was going back to the top of this trend line. And for some people that saw me trade this, saw this chart with me, and you took it from here, so I think by now you should be clocking your 852, 860 pips if you took with me from here. So I marked it a couple of weeks, months back. Sorry, but I thought this was going to go all the way to the top of the trend line. But as you can see, it hit somewhere here and returned back to the trend line. Not a problem. We are not, like I said, we are not trained to think unidirectionally. We are trained to think multidirectionally. Can I say multidirectionally? Okay, if that's a good one to use. But we are trained in such a way that we don't keep selling. We have to sell and protect our profit. We have to buy and protect our profit. Just in case the market turns, we would react accordingly, either taking our profit, moving our stop loss in certain places so we can maximize or protect our profit and get out of the market unharmed. So as you can see, it's come back to the trend line. So I'm expecting this to jump back up. It could come back to this trend line and to this level, to this support resistant line, and drop back. Or if it breaks it, we know that it's going back to the moon. So that's one of the pairs we're looking at. We're going to look at that again. This was the pair that we traded. In fact, this really gave us some really good move last week. So look at what happened here. We've been at this pair for the past how many weeks? 3 weeks or thereabout, waiting for it to break out this consolidation. And as you can see, the moment it jumped out of this consolidation, we jumped in. And what happened? It kept dropping. It kept dropping. And I think, how much did this guy give us eventually? Let me see. It gave us 226, 228 pips. 228 pips since it broke out. So that's the power of consolidation. I love breakouts because if it's consolidating for a long time, definitely when it breaks out, it's gonna give you massive pips. So we looked at GCAD. GCAD was one pair that really dealt with us because we saw this happen. We saw this move happen. You see that double bottom, kind of like a double bottom, 1, 2. You see? Double, some people might call it triple bottom. I'd rather call this a double bottom because, as you can see, it came here. It didn't go back here before dropping. If it went here and dropped, I would have called it a triple bottom, but it dropped here. It didn't go back all the way to the top. It dropped, hit here again. So I would just, this would be for me one hit, and then this other one will be a second hit. So this is what we're looking at. We expected this to do that, to come in, retest, and then jump up. If you want to see that move, we wanted this to go up, retest, and then, oh, it actually came back, it retested, but what happened? It didn't jump up, it fell. So we had, some of us had our entries here. Now, I don't want us to believe this was a bad move. It wasn't a bad move, and I'll tell you why. We had our entries here, had a stop loss somewhere around here. You know, normally when you trade double bottoms, you can have stop loss around somewhere, the lowest, the previous low, or maybe just bring it down here. But that's ridiculous to bring your stop loss back here. It's too much. Except your TP somewhere around here, then it makes a lot of sense. So, so we had a stop loss. I had my stop loss on this demand zone here, so it came back. But when I saw that giant move coming, I just couldn't. I can't remember if he hit me out or I jumped out myself. You know, the reason why I said this wasn't a bad move is that, number one, we saw that breakout, we saw that retest. Every time you see price break out of its zone, its key structure level, what does it do? We expect it to retest, right? You saw that move, it broke out, it retested, and when it retested, what did it do? It dropped. Yep, it dropped. So another one is, it broke out of this zone. What did it do? It retested. What did it do? It dropped. That's one mindset. The second mindset is the double bottom. It does a double bottom, and if it breaks out of that double bottom, it comes back and retests that place that it broke out of, and then what would it do? It will jump up. That's the second mindset. Now, we picked the second mindset. We thought the second one would hold. Remember, there are two school of thoughts in this trade right now. Some people are trying to trade the sell. Some people are trying to trade the breakout, retest, and drop. Some people are trying to trade the double bottom, breakout, retest, and jump. So the two of them is good. It's a good pattern, but you have to understand that, or realize that there are people in the market that are also looking at what you're looking at. The people with the much more money are the ones that are going to win in the market. So if everyone decided to trade the breakout and retest and drop, then that is what is going to happen. So if maybe you only have 1,000 pounds, 500 pounds, or even 100,000 pounds, you want to trade the double bottom, and you're trying to go against people that have 1 billion, definitely that is not going to hold. It is those that have the larger liquidity that would control the market. But so in this case, the bears controlled the market. The sellers controlled the market. They traded the break and retest, and they all sold at this point. Yep. So we decided to buy here, but it didn't work for us. You know, because we don't have we belong to the class of people that were bullish but didn't have the liquidity to control that market. So they were both good trades. So just take note, they were both good trades, but only those that had the largest liquidity won the market, which were the bears. So next time we would have to also probably keep our stop loss tight enough so that we don't let me be honest with you. I didn't take into cognizance this retest here. I didn't take it into cognizance. I was really, really concerned. I mean, looking at the double bottom retest and breakout and retest too. If I'd seen this, if my eyes had seen it, I probably would have been very careful with the entry. I was really looking at this, giving us how many pips at the end of the day. Here, yep, 1,000 plus pips, but we lost that trade. But I think some of us made it. I think Adrian got in as well in a sell here, and then she wrote it down and made massive pips on the way down. I got in on this one because this is the one I was really, really looking at, so that I won this market. So another one was the AUD. This kind of moved in the same direction as this guy here, GA, because of the impact of the Aussie dollar, you know, but never really traded this. I didn't really trade that. What's this one? I didn't really trade that because this has really been messing up. this was one of my best pairs, but for some reason it's really been messing up. It's not really respecting structure. Broke out of here, really good. Retested. I said fantastic. It jumped up. Then if you see what happened, it came down, retested. I thought one would expect this to drop. What did it do? Yeah, it's kind of dropped, but then it jumped up again. Went out of the structure, went up. It retested. One would expect it to go up, but what did it do? It broke down again. Retested, dropped, retested, dropped, retested. Okay, finally dropped, and we expected, okay, if it's gonna drop. Nothing happened. It went back up. So it's just all over the place. It's not really working the way we want it. And again, like I say, don't force pairs. If it doesn't do what you want it to do, I mean, if it's not moving the way you want it to do, move to the next page. If it's getting too confusing, move to the next pair. Trade what is easily recognizable, what you can see clearly, because it's your money you're putting in. So you don't want to gamble. You don't want to put your money into something that will not give you the result that you want. So if this guy is confused and is not moving in the way it should move, leave it and go to something else. There are different major pairs there that are quite that are easy to trade. You have the Euro USD, CAD JPY, NZD USD, AUD USD. They are all major pairs. They can really help as well. So this is another one. Okay, this is something I'm going to look at eventually. This was another one that we're looking at. This been in this triangle for a while. So, but we're going to be trading it as well. Let me see if there's any other thing I looked at. GBP. Okay, I looked at this one as well. This has been, it's not really jumped out of this zone. It's been here for a while. Retested like we expected it to do and drop here. It dropped all the way to this place, but then it's just been going up and down. It's not being able to go back up or come back down. So this is another pair we will be looking at. So for today, we'll start looking at USD chef. For the benefit of those that have just joined us, I'm just going to go through the ones I've marked already, but for the benefit of everyone that have joined us, I'm going to remark this so that you can see how I roll. So first of all, I look at things from the higher time frame to just pretty much have an idea of what's happening. Sometimes I go to the monthly, sometimes I just take it from the weekly like this. It's okay for me to take this from the weekly because the monthly just looks plain. So for here, pick up my my horizontal tool, look for the highest point of the market. This is where the market is at this point in time. I look for the lowest point of the market. This is where the market is at this point in time. Yep, this is where the market is. So in this chart, I can still see different levels. This is another level I'm looking at as well. I can call it a level. Why? Because if you look at it, if you look even into the past, you see that there's a touch here, there is a touch here, multiple touches, which is what I like to see. I like to see the different touches, multiple touches, So after that, it's okay. I can move to my lower time frame now to see what I can find. This juncture, I see more touches here. See, there's one there, there's one here. There's really nothing on this side. There's no price action on this side to the downside here to really tell me, give me enough information. But good, I would only work with what I find. Let me see if I can find something on the, okay, a few things here and there on this side. It's not a problem. Let me see. I can still, for me, generally, I know that this market, if it's going to do anything, it probably might be coming down. So it's still let me see how many pips apart. It's too narrow. So I want to also mention, when I look at the market, I'm pretty much looking at 100 pips move in the market. 100 pips move. So if I say something like this, these are like levels. These are like levels for me to add different positions. When it comes, if it comes here, I'm going to add another position. If it comes here, I'm going to add another position. But really, where I'm expecting this market to go will probably be here. From where it is at, excuse me, I'm expecting market to come this far. This is probably where my TP would be. But in all of these other levels, I can increase my position, start with 0.02 or 0.1, depending on which of the accounts I'm using, 0.02. Then I bring it down. When it comes here, I increase it 0.02 again, and it keeps coming down 0.05, be 0.1, and then from here I take a TP and then get out of the market. So, but looking at this chart right now, this is what I'm seeing. I think you see what happened there. Some of us I don't know if any of us have seen any or some of our videos that we talked about the teacup, the cup of cocoa or trade, cup of cocoa strategy that we use. So you see how you know what that is. I just recently showed us that one as well. Where you have something like this and you see a retest coming, a break, it tested that, it came in and retested, formed that W, sorry, this doesn't have a writing material, only has lines, so otherwise I would have drawn a W for us, but just manage this W for now. So your W doesn't have to be a fine U bottom. You can have this. So you have that test, then you have that retest. Yep, you have that test or breakout or retest. But then really this is what you're looking for. Let me just draw the line out for you. That's for you to see this as a valid cup of cocoa. Then that's so that's what will make. So you enter your trade in this, put your TP, I mean your what is it called, your stop loss somewhere around here, maybe 30 pips or 50 pips or whatever. Put your stop loss there, then you sell. Yep, sell it to wherever the next level is, wherever the next level you can find. So that's why you have to play with your lower time frame to see the smaller levels, so you can. It's one of those scalping strategies that we teach here as well. So just pick out maybe go to your 1 hour time frame, your 4 hour time frame, and just take something out of it and then get out, you know. But if it keeps going down, put your stop loss into profit and then let it ride as far as it goes. So, but this is what you're really pretty much looking for in the market. Oh, sorry, let's get this out because it would annoy me if I keep seeing all those lines. Okay, a second, final one. Yes. Now, so this is what we're looking for. We're looking for this. It has come here. We tested that. What we're looking for now is to sell this market. So right now, if we sell this, I'm expecting this to come all the way down to this level, you know, for 320 pips. If you are blessed, if we are so blessed, this should come all the way back to where we are here. If not, we can take TP here, 500 plus. But if you're just scalping, just jumping in and out, these are your levels, all of these small places. So you pick it up from there, take one here for 100 plus, take another one here, take another one here, you know. But if you go down to your smaller time frames, you see even much more levels for you to scalp and just jump out. See small levels. Like now, it's already moved how many pips from when it touched? Let me see, 20 pips. Let me bring this down since I'm here now. Yep. So it's already touched. I mean, giving you 20 pips, but you know I don't scalp anyway. So that is what you're looking for right now. Looking for these levels. Pick it up and then get what you want to get. And this is a very fantastic trade to look out for if you want to trade this. So that's USD Chef. It's a very cheap pair as well. Let me see how much it is in the market. USD Chef. Okay, right now this particular one is ridiculous. So use a different XM or XM. They're quite expensive. So use a different. I'm using different broker, but that's I think when the market opens, it might be cheaper than that. So that's USD Chef. Now USD CAD is the pair I'm really looking forward to trading. Okay, let me bring this out and mark it up the way so that you guys can see what I'm doing. Okay. Excuse me. Did I have to do that again? Okay, this is what I'm looking for. Oh yeah. Now, again, to go to the higher time frame, identify where price is at. This is where one leg is. This is where another leg is. See this? So sorry, you would hear some music on the background. We have Thanksgiving tomorrow, and my wife is really getting very excited about praise and worship because we're leading praise. Choir practice was awesome today. So she's still in the worship and praise mood. So you can hear a lot of music on the background. Okay, so I've identified the key places price may get to and probably turn or whatever. So I'm on the weekly. If I bring it down to my daily, you can see what I'm seeing. This is a very sweet market. A very sweet market because see what happened here. We had that double bottom, reverse double bottom, inverse double bottom. Oh, sorry, inverse head and shoulder. You know, happen here. They drop the shoulder, the head, the shoulder, and then that jump. And it created another double, head and shoulder. Why do you keep calling it double bottom? It created another head and shoulder. That shoulder, that head, and then that shoulder, and then that drop. And this shoulder became this head's shoulder. This is another shoulder. So this is a very sweet pair. It's made like three. Okay, it's made another head and shoulder. It made another head and shoulder here. It's made like 3 or 4 head and shoulders already. So I know this is another head and shoulder happening here. So what do? I mark it out. That's my guy there. I don't know how many of you know that I love head and shoulders. I love head and shoulders. But also I want you to also understand that it doesn't always hold. Sometimes head and shoulders fail too. There was a particular pair we were all trading. Myself, Lindor, Gustav, everyone was trying to anticipate that head and shoulder. We saw it clearly. It moved like it's supposed to. But out of nowhere, it just changed, became something else. A lot of people lost money in that trade. That was in Euro JPY. And that was when we still had Scott Livingston and Eddie here. So that's my trade I'm looking at. Sorry about that. This should actually go down here. So that's the trade I'm looking at. So what I'm really looking to trade is this area here. This is my entry. This is my entry. Or if I decide to be overexcited and aggressive, let me take this as my first TP. So if I decide to be over aggressive and excited, once it breaks out of here and the second candle comes out, I can enter my market. But the normal way to trade this head and shoulder, the normal way to trade this head and shoulder is to let it break out and then retest. Then you take your entry here. Yep. Let me put this in, make it clearer, nice and neat. So this is where you have your entry. Then you trade it to the upper side for how many pips? For that first TP. Oh, Jesus, that's 200 plus. Nice. That's 200. But your main TP will be the measured move. As from here, the shoulder, to this place, the head. And that's how many pips. Let's take that. The measured move. So take this. Oops, sorry. So this is your move. And that's your second TP. Now, if you look left, let's see where it aligns. Woohoo! Beautiful. Did you see that? Aligns in a key structural area. See? Like I would say, copying my mentor, Oren, I can't make this thing up. You can see it. The measured move aligned with a key area, key resistance area. Yeah. So I won't if I were a swing trader, I wouldn't, let me not say if I were a swing trader, if I was swinging this one, I wouldn't jump out so easily. As long as I'm still in profit, I won't give myself any reason to jump out. As long as I'm protected, I put my stop loss into profit. I stay there. Let's see how many pips we're looking at. Because if I decide to swing this, that's 300 plus, 390 pips. 309. Oh, on the dot, 390 on the dot. You see, this might actually be a divine, what's it called now? Divine pair or divine setup. See, 390 on the dot. Nothing, if you can see it with me. So that, if you have like a standard in the market, that's 3,900. You know, 3,900. If you have a mini, that's 390 pounds in just one pair. And if you have a micro, that's 39, which is fine. It's absolutely fine. But you can actually start with a micro on this pair and then make it up to that, because you're starting with the 0.1 or 0.02 or 0.01 or 0. Whatever you want to start with. Then when you go to your smaller time frames, this is where you increase your positions. Go to your smaller time frame and look for positions or opportunities to enter the market. Again, it's just so unfortunate right now because there's no much thing to see when you drive down to the one, unless you use TeamViewer, then you will be able to see more positions up there. If you use TeamViewer, it will show you more positions out there. So, but right now, that's all we can see. So unless you go this far, so you scroll, or you can scroll, keep up, just scroll and. But if that's the problem, like I said, go to TeamViewer and then use TeamViewer to find the smaller levels that you can jump into the market and increase your positions. But look at that setup. Isn't that so nice? Look at that setup. Yep, a setup, so sweet. So look out for this pair, guys. Look out for this pair. I'm gonna miss this pair. Once I see that breakout, I'm selling. I'm buying. I'm buying. Again, because it's so sweet like this, they can fake us out. They can deal with us and decide to drop this back down here. So don't think it's written on a stone. Anything can go wrong. So it's just a perfect move. See that hit, see that hit, see that hit. So they can fake us out. See that hit. So just expect this once. But even though it comes down, we are not shaken. We are not moved by whatever it does. We're going to just wait for it to come down, and then we're going to wait for that retest to happen. When that retest happens, then we're going to sell it to the downside. Sell it to this side, But good thing we had different levels here that we can jump into the market and with several positions. So you have these different levels. But at the end of the day, how many are you looking at? 278 pips. So you can increase your positions at different points. Bring this down a little bit so you can align with this. Dip, touch, good. So that's your pair as USD card for you. In fact, I'm really looking at that pair. Euro USD. This is the same patterns, same thing. Let me just do this. I'm just going to do about 2 more thereabout, and then I'll just show you the rest. So now look at this. Go to the higher time frame. You can easily see what's happening here. First of all, identify the highest point of the market. Let me use this one. Yes, because right now the market is coming down. So then I'll identify. I don't need to go that far. This is where the market is at. Because even from here, so here is how many pips more. Yeah, so it's fine. It's all good. So right now, see what's happening. Now, you know how it is. As long as you see right now, you see what was happening. It was maintaining a very good what's it called, upward momentum. It was going up, but for some reason it just stopped in the ceiling. And what are you seeing? It's coming back. So I believe this market is gonna keep coming down. But even though it doesn't keep coming down, it's not a problem. It's not a problem at all. We would trade whatever it does. Right now, this is what it's doing. I'm going to put one here as well to capture those alignments. Let me see if I can put one more here. Yeah, just to put things in perspective. So I come down to my lower time frame to see what's up. Yep. So you see that console. I know some of us knew when we were looking at this consolidation that this thing kept consolidating. It was really struggling to break it. You know, it stayed here for quite some time. You know, so this is what it did for a long time. So eventually broke out of that consolidation, retested and dropped. Has come out far, 100, 240 pips. You know, so it's done that already. It's done that already. So now what are we waiting for? We're waiting for clear signal to either keep buying. I mean, either start buying or start selling. Whatever it does, it's absolutely fine. We are not phased by its movements. So this is where we are. So if this guy, as you can see, rejection happening here. If it rejects, breaks down, maybe it's trying to retest before dropping again. Not a problem. If it rejects here and it's definitely going back up, you know, definitely not going back to this area, but it's not a problem. We won't be bothered. Let me see how many pips if we take it back. Say 100 plus 160 pips. Yep. But I would only trade. I won't trade. This is why I trade. I don't normally take trades that are in the middle of two zones. I take trades that are breaking out of the zone and probably trying to retest. So if this guy breaks out, like for this could be a retest. If it started here, you probably would have bought it from here, then taken it to the top. But right now, what I can only suggest is for you to wait to see a clear breakout and a clear confirmation for you to sell this market or to buy it. If this goes back up here, this is where you now start buying. Yep. Wait for it to retest, come back and retest this, and then it will jump back into that consolidation. Jump back into the consolidation. You know, do whatever it wants to do. You know, but I don't really trade this pair anyway. So, but for some of you that trade it, so that's your move. Wait for that to break out, retest, and then drop. Now, the reason why we identify zones. Why do we identify zones? Zones, we identify these levels and zones because these are places that we anticipate the market to get to. Because price action, if it's been there before, it's going to go there again. So we use those levels to identify our TP levels, our target levels, our stop losses, where our stop losses are going to be, where our TPs, our targets are going to be. In fact, levels are very important. Levels are your support and your resistance. You know, they help you to know where the market is going to turn or if it's going to break that level. So we've identified this level. Now, if you go to the smaller time frame, they become noisier. You know, you'll see loads of levels, so you're not sure where it's going to turn. You know, so these places, you would see the price will make some reactions in these smaller time frames. You know, they will go up and down like zigzags. But it is the higher time frame that give you more accuracy. You know, that's why you see me, I trade the daily, the H4 as well. So if you come down to your H, you would see more levels as well for you to trade. If you want to scalp, you can come back to your H1 and then look for even more levels so that you can scalp it and then make some quick money as well. But whatever time frame you trade, as long as you get the right confirmation, do not jump into a trade unless you get a confirmation. You see, it's the same thing. If you bring this down, you see, it's the same thing that you saw H4 that you're going to see here as well. See, all here. See, if you want to move this up a bit, it's entirely up to you. You know, so, but I would leave it because looking at my, I mean, here it might mess up this area. You know, so that's Euro USD. What you're looking for right now, see this rejection is already started, so don't jump in this trade at all. Leave this trade alone. It's already started making its move. Let it go, you know, and you can wait for, or you can do another thing. You can draw a trend line across it. Excuse me. You can draw a trend line across this. That's another thing you can do with this trade. Draw a trend line, and let's just see what it's going to do. Oops, I want to move that. So, yep, have that. So what you're waiting for right now is to see this move coming. You're trying to see this move break out of this trend line, because if you notice what it's been doing, it's been hitting here and dropping, hitting, dropping, hitting, dropping, hitting, dropping, hitting, dropping. So now you've boxed it up. You put it in a box right now. So you're saying that I know that it's going to come back and hit this place. And once it hits this place, it's going to come down. So you can wait for it to hit here. And then when it hits here, you can sell it back to this level. Scalping. It hits here, you sell it back to this level. But if it breaks out of that trend line, comes here and breaks out of it, what are you waiting for? Are you waiting for a pullback or some form of pullback or a retest or whatever? That's what you're waiting for. Let me take this is not part of it. So you're waiting for something like this, either that or maybe it does this. But even though you entered when it did this, it's not very bad because the drawdown won't be that great. So even if it comes back after you entered and touches here, that's only about 9 pips or thereabout. So what you're waiting for is for that pullback so that you can buy. You're buying to the upside to scalp. How many pips are you looking to pick up from there? Might be a good pips, number of pips. Yeah, not bad. 86 pips. About 80 pips, 70 pips, you're out of the market. You know? So draw that trend line, wait for it to break out, or wait for it to hit that trend line. You're given a perfect to scalping you. Yeah, that's true. It is actually, to be honest, really. You know? So it hits that drop, hits that drop, hits that drop. Once it hits this place, that's your cue to sell it. Sell it to this point for how many pips? Sell it for this point to let me see. Come. How many pips would that give us? It's all good. 40 pips. It's all good. Take it and go. Then if it breaks down, you know what you're doing. You're selling it to the next level. But if it doesn't, if it keeps, there's no way this price is going to keep going and go. There's no space anymore. So wherever it gets to, it must break out. Either it breaks out of this trend line, then it goes up, or it breaks out of this level that you have here, then it comes down. So that's why you box up price. You put price in a box. It's like water. It's going to break out. You know. So that's that one for you, Euro USD. AUD USD. This is Adrian's pair. So I'm not going to mark this one because I've already marked it. But I'm going to make you see what I marked. I went to the higher time frame, like you see. I'm in the weekly right now. I had my levels drawn out. I think I can move this up because I think I marked this on the monthly. That's why I got that. So this is what I want to see. See? Again, can move this. I think this is fine. This is fine. So this is what I'm seeing. I noticed that price came in. It hit here. It hit. It kept going up. I had to draw my trend line to capture all of it. And coincidentally, the trend line was having confluence with key levels, with the support lines or resistance lines or whatever it is. If you draw it across, you see a touch here which is in confluence with the trend support line. In confluence with the support line, that missed it by a few pips. In confluence with the support line and in confluence with the support line. And then what did price do? Price broke it. Broke that trend line. You know, remember what I talked about in Euro USD? You know, that if it breaks out, it's going to keep coming down. So it's the same thing happened here. What did it do? It kept hitting the trend line, kept hitting, rejecting. It will hit, it will reject, go back up, come down, hit, reject, go back up, come down, hit, reject, go back up, come down, hit, reject, go back up, come down. But at the end of the day, what did you see it do? It broke it. You know, sometimes we like to see it hit that trend line or a particular level like 3 times. Then on the 4th one, it breaks out. It doesn't always happen like that, but we can see this one 1, 2, 3, 4. It hit on the 4th one. It didn't even break. Came out on the 5th one. You know, yeah. So, but it's all good. It's absolutely fine. Sometimes that rule applies. Sometimes it doesn't apply. But the fact that it hits that trend line, you want to keep watch over it. So when it hits that trend line, you want to look for a retest. This retest, you won't see it on the weekly time frame. Come to the daily or the smaller time frame to see what's happening. If I come back even lower, I would see a retest. Remember, retest either on the H1 or the 15 minutes time frame, depending where we are. Where's the trend line? This is it. This is that trend line. What did it do? It broke out of it and retested. Broke out of it, retested, and then what did it do? It dropped. So that's the retest we're looking for. So just in case you were not really waiting for a retest, maybe you're looking for a pullback. It's not bad. A small pullback is not bad as long as you're able to withstand the drawdown. The drawdown may not be that great anyway. maybe just a few pips. So maybe it came down, you wanted to enter when you saw a pullback on the H4. Let's see what happens if this is where it is. If it wanted to come back, that's only 29 pips. Not too bad for a drawdown. So let's assume you entered the market at this point. Still very good enough. You've made yourself how much from here? 104 pips just from that place. So wait for the market. It came out, retested, came back, broke that trend line and retested and dropped. Now what did it do? It came back to this level, key level. It didn't break it. Not a problem. It didn't break it. It's coming back up. This may be another retest. It may come back and retest this trend line. So you can do two things. You can either not enter this trade at all until you see a rejection, or you can wait. Once it comes back to this trend line, you sell. You sell back to this place. But when you put on your sell, make sure your stop loss is somewhere around here. Because that's the previous low. Well, if you wanted to do your previous high, your stop loss should be somewhere around here, but that's just ridiculous to put your stop loss there. So stop loss would just put it here, because that's a level as well. So let me see that, do that very well. Let me see how much drawdown that would be if it comes back to hit. About 28, 30 pips. Not bad. So if you want to keep it for 30 pips, because if it enters back into this trend line as a full bullish engulfing candle, then you have no reason to still be there. Get out. But if you could just throw in and throw a wick and then drop back, that's why we put that stop loss there. So just in case it throws a wick, so it doesn't take you out. So it goes back there, it tests it and then drops, then you can be sure that you're going to go home with how many pips? Yep, 130 pips. Or you can wait for it to come back down and break this level. If you want to trade, you're sure that it's definitely coming down, wait for it to come to be clear of this level. Clear of that level, retest, do your retest. What's that line doing there? Sorry, get this out of the way. Yeah, so come out, do that breakout, do that retest, and then do that drop. That will be your trade right there. And how many pips are you looking for there? Yep, a whooping 170 pips, 170, 169 pips. That's what you're looking for in that move. So for AUD USD. But even if it doesn't give you the downside, it comes back here, not a problem. You only trade what you are sure of. Immediately it breaks out of here, what are you going to do? You're going to wait for, you're going to wait for that breakout. Again, same principle, nothing changes. Wait for that breakout and wait for some form of some form of pullback or retest of that zone that it broke into. And when it does that, and take it to the next level. First of all, remember you have a level here, so you need to pay attention to that level, because it may just keep going up and down that level. But when it breaks it, you can wait till it breaks that level, or you can just trade to that level. Just pick that few pips that you have there. Yeah, yep. Take that 100 pips that you have there and just get out. When you get out, wait for it to break out or for it to come back down. It's really interesting, because you can see it happen. You can see it play out. As it's going, just wait for it to get to that level. If it gets to that level, get out. Wait for the rule. What's the rule? Break out, retest, sell again or buy again to the next level. As long as you've created the level, when it gets to that level, get out, or you move your stop loss into profit to protect your profit. When it breaks that level, rejects it, get in. So it's just really as simple as that. So the good thing about it, paying attention to one pair is that you can easily see the movements. But when you're all over the place, you would miss it. You wouldn't know when it gets to that level. By the time you come back to it probably will have passed, and you have to either start chasing it. So just if you want to just concentrate on one pair, one or two pairs, so you don't have your attention all over the place. If you want to pick this one and Euro USD, pick JPY pairs or any one of them, then just pick those ones and then pay attention to their movements so you can understand how they move. Like I love GBP AUD, moves well, though it's expensive. You know, it's expensive to trade, but I love the movement. It has not a lot of fake outs. So AUD USD, that's that one. What you're looking for is for that breakout, retest, and drop. Otherwise, don't enter yet. Wait for this to either get here. If it gets to this trend line, you can sell back to the this level, or you can buy when it breaks out and retest. Now, this is one pair that I called. I can't remember what month I called this pair. It was because I saw this move happening. I saw that. Yep. I saw that. Yep. I saw that. Yep. I saw that. Yep. So I saw this was here when I called it. I still have the chart somewhere. Called it on this platform. I called it on Dr. Cassie's platform. So we picked it up all the way from here. We knew it was coming back, coming down here, and it actually came in. And what did it do? It came all the way to this point. It didn't touch this because I remember when we entered it with Lindor and Adrian, it didn't touch this level. It should have touched this level. It didn't touch. It didn't touch the level. It rejected just before it got to that level, and then went up. You know, funny enough, we expected it. I was really expecting this to go back up here. You know, but what did it do? It went as far as how many pips? Only 160 pips, and then dropped and went all the way back down. You know, so now we're expecting this to come and retest that and keep coming down. You know, if it comes back, it may come all the way back to this level or to this level, and then, but we'll keep selling whatever we see. We won't trade what we don't see. We won't trade. We'll only trade when we see a confirmation. Yep, that's that one. Another one is GBP USD. Same level, same thing. Trend line. I'm gonna increase this. But what I want to show you before I talk about that is, if you look at left, see what happened. That drop. See? You see that giant drop here? What was the market trying to do? Correction. It came in and corrected. So if you wanted to do that, remember what happened in GCAD? It's exactly the same thing that is happening here. Drop, came back and retested that level, and then what did you see it do? It dropped, tested it again, and then made that move. That's one thing to look at. The second thing is that the market kept making higher highs and higher lows, higher highs and higher, keeps going up, kept going up, kept going up. And then what happened? It kicked one here, it kicked the second one here, forming what? A double top. And what do we know a double top to be? A reversal pattern, a reversal pattern. So once it's not able to break the previous high, immediately break the previous high, it means it's going to the next level. But this didn't break, it couldn't break the previous high. The first high it did, it couldn't break it. And then what did it do? It kept coming, it came tumbling down, you know, like the wall of Jericho. Some of us that are, you know, that read the Bible. It came down like the wall of Jericho, and it's coming down right now. Now, I'm not saying that this is just going to keep coming down, because I don't know what the market is going to do. But right now, we know that it's reversing. So it's broken this level, the previous high. It's come down, you know, broke the previous low, sorry. It's come down. So the next thing that we're expecting this to do is to come to this level that we've identified for it. But mind you, I saw another level just now that guys were just here. This is one level. Oh, I could have missed that. See that? That's a touch there, a touch here, touch, a touch, a touch. So it may come to this level and jump back up. But once it breaks this level, it's coming back down. It's going to keep coming down like that. Let me increase this so you can see clearly. You know? So this was seen right now. So what are we expecting? We're expecting this move, this guy to come here, either break that and then keep coming down. If it does it, it's going to reject, go and test that and drop. Or if it breaks this, going back to the trend line to retest that trend line and drop. If it doesn't drop there, it's going to go back into that trend line. But whatever move it makes, we are going to follow it. So right now, I'm expecting this I expected it to come down, touch this properly, but it hasn't done that. It seems like it's rejecting, but not a problem. I'm not trading anything inside here. I'm not trading anything inside here. But if it comes back to this level, and there is a reject, you can either enter here with a stop loss here. You know, so if you want to scalp that, just jump in and jump out. So you can enter there. Your stop loss will be somewhere around here. The previous high. This is the previous high as far as we're concerned. You can see it. Previous high. If you go to your lower time frame, you see the it clearly. So see that's your previous high. You can put in your sell somewhere around here. Then your stop loss around there, and then you sell it back to this place. As for GBP, let me take out this. So you guys can see clearly. For GBP, USD. So how many pips are we looking for here now? If we sell it back to this point, let's say whooping 180 pips, 84 pips. So once it rejects here, goes back to this stop. If it touches this place, sell. Put your stop loss somewhere around here. How many? Let's see how many risk. Okay, that's a 1 to almost 1 to 2, almost 1 to 2. That's a 40 pips stop loss to make 180 pips. So that's not too bad. More than, okay, I think that's 1 to 3, because 3 times 4 is how many? 120. Yeah, 1 to 3. Risk to reward is really good. 1 to 3. So you can take this, wait for this reject, or if it comes down and touches the properly, you're not in the trade. You're not trading this move. Let this move finish. Whatever it's doing here, we don't know. Don't care about it. Let it finish. Except you want to scalp, then you can go back to this time frame and then kind of just have an idea of what's happening. Then you can jump in and excuse me, jump in and jump out as you will. So if you're trading this, look at what the market is doing. It's making lower lows and lower highs. So you can draw a trend line, cross it. You can give yourself a scalping strategy, scalping opportunity, I would rather say. So this is what's happening right now. Yep. So what you want to do is hitting that, dropping, hitting that, dropping, hitting that, dropping. So you just wait for it to hit here. Again, you hit here, sell. From there, you can sell from there, back down here. Okay. So you can sell from here. Just even when a good opportunity if you want to. But then your stop loss, you have to put your stop loss, previous high will be somewhere around here. Previous high. So it's just in case it throws a week and drops back. So you're selling, make sure it comes to hit this trend line. So you can sell all the way back down. Sell all the way back down. Look at the levels on the right hand side, 1.36335. But if it breaks that, you know the drill. Let it come out. Let it pull back or retest or any of those things. You know, then you buy back to the top side. For how much? Let's see how much this is going to give us. We'll buy from here. Not too bad, 60 pips. Not too bad, 60 pips, 60, 65 pips. So that's your move on USD for the scalping. But if you go to your higher time frame, you can just wait for these moves to happen. If it goes up, you wait for it to come here, then you sell back. If it comes out, I would say, because it's so close to this level, why don't you just wait? Or if you just really want to sell it, just wait for the rule. Wait for the rule to play out. Let it break out. Yep. And let it pull back or retest. When it does the retest or pull back, you buy again. Buy to the trend line. Buy to the next level, be that trend line. Or you can create a level for yourself somewhere around here. Yep. Buy all the way to this level. You may not really get so much, but anyway, we might actually. Let's see. So you buy back to that level, which would be, yeah, not so bad. Yeah, 120 pips. Yep. So it may go there, or it may even do you wrong and come as far as this place. But it doesn't matter. You have, once you're in profit, move your stops in. It's already like 70 pips. So once you're already like 20, 50 pips, move your stop loss in, just in case. Yep. So that's GBP USD, GBP Y. Been looking at this pair for quite some time. I don't even have identified. Okay, I was talking about it just not too long ago. Now this is one pair I've been looking at as well. Marked this like a few months back. So I saw that line, and I identified the key lines here key psychological levels here. I don't have the time. I would have identified them for you. So these are key psychological levels. This is the psychological level, psychological level, psychological level. It's like, what do I mean by psychological level? They are whole numbers that everyone in the whole wide world that is trading is looking at, because most people look at the numbers as round figures. 1,400, 1,450, 1,460, 1,455. All the other 492, 393, and all of those are just normal numbers. But the round figures, 490, 480, 450, 400. All those numbers are psychological levels. They are people that are really, really looking at those levels. They want to take profit at those levels. They want to put their stop losses at those levels. They anticipate the market to turn at those levels as well. So those are that's what happened on GBP JPY. I saw that move drop. We traded. I think we took it all the way from here to this point, and I was really anticipating this head and shoulder. I marked this thing out. Yeah, it played out, but I missed it. That's what happens when you have too many pairs. So I missed it. So it went up. It didn't go all the way back. Or I thought this was going to go back all the way back to the top, but it didn't. Just like AUD USD did. It went halfway and then dropped. Went halfway and then dropped. And where did it drop? All the way back to the trend line. Dropped all the way back to the trend, which in Confluence coincides with a level around here. I think I would like to bring this even down more so that I can bring this down, because yep, you see that it touched there, touched here, and then this guy as well. So that's a key level that it touched and then reversed. So what are you looking for in this pair? You're not looking to take this trade unless you get a good confirmation. Right now, even if you start selling at this point, maybe it wouldn't be a bad idea, because the move is how much has made already. It's already made 50 pips move. It's not bad. So come down to your lower time frame and see. Let me come down. Okay, H4 is fine. So what you're looking for right now, look at levels that you can jump in at. Right now, this is where the market is at. So this can be a level. So look for this level. This is where the market is at this point. Look for it to break out of this level. Break out of this level, reject this level, break out and jump, and retest. Right now, retest here. You can still buy this to the top, or buy this to wherever it's going to go to. But first of all, like I say, identify key levels. It just looks so choppy, so I can use my line chart to kind of see if I can capture better levels. I wouldn't even, I don't trade GBP JPY anymore anyway. For now, some of these pairs are just pairs I trade when I see something good in them at one point, and when they stop forming, I go to the next pair. So you can do that. So when this does the reject here, it jumps up, retest here. So you're looking to buy that to this level. How many? Yep, not too bad, 100 pips. If that breaks out, buy to that next level. Otherwise, you sell it back down. It's really the same principle repeated over and over again. Market structure, price, action, all of that. So let me go back to. So that's just it. But if you want to look at it from the higher time frame, you see, all you need to do is just to sell at this point and then anticipate it going back to the upper range, because you already have this. You already have this working out. You already have this. This is it's been touching it. It hasn't broken this trend line yet. Let me see, it hasn't broken it. So because it hasn't broken, it's probably going back to the top or to this point that it's gotten to. But not a problem. Wherever it gets to, we won't be worried. We'll just trade it, do whatever it gives us. Yep, it breaks one level, it's going to the next level. So GBP AUD, that's up there. We've been looking at that one. We've taken so much out of it. Same principle, same pattern. See, we identified it. Yeah, identify the key levels, like we say, higher time frame, key levels, key levels, key levels. Reason why we identified this point was because it was in consolidation. So we're expecting it to either break to the upside or to the downside. That's why we had it, we marked it to this level. You know, if it broke out to this upside, that would have been sweet. Let's see how many pips that was. 700 plus pips if it broke out to the upside, you know, but it's all good. It's fine wherever it goes to, we'll follow it. So now it broke to the downside, Look at what it did, like the rest of the other guys did. First of all, I don't know how many of us were that I hear that were with me from the beginning. We saw this cup of cocoa, you know. This is, in fact, this was a very perfect cup of cocoa. This is, I think, this was where we coined the name. We saw that cup, formed that handle, and then it formed that handle. It came up, retested, and then kind of consolidated a bit here, and then jumped out. See that cup, and then see that handle, and then this is how you trade it anyway. This is how you trade it. Normally, the TP is supposed to be the difference, the distance between here and here, where the bottom got to. That should be your TP. Then you take it from the retest. I think the retest is that's somewhere around here. Yeah, am I right now? Yeah, I think the retest is somewhere around here. So the retest is somewhere around here. So when it breaks out of that downside, you retest here, then you take your trade, you buy it all the way from here to wherever the height is. Like if you look at it, it's inside a key level. It actually got there, smashed it, you know. So that's, some of us took that, some of us missed it, but it's all good. But it's just to have an idea of how this moves. And then what happened, it just kept consolidating. You know, I was really waiting for this move to happen. So marked it out. And what happened, it really broke out. When it broke out, we all sold. We sold and sold and sold. Saw that retest happening, but it kind of faked out a bit. It kind of pulled in. We wanted it to break out and then just kind of retest it. But what did it do? It retested and drew us in for another 33 pips. But weren't afraid. We stayed because my stop loss was somewhere around here, I guess. It's previous low. And then what happened? It dropped, and it's still dropping massively. So from there, if we entered here, this is where we entered. Yeah, that's down. I entered somewhere around here, I think. So this is what happened. 225, 28 pips. What that guy gave us, and it's still dropping pips like nothing. So, but another thing you also have to put into consideration is confluence. See, another strategy. See what happened. That trend line. What happened? It broke the trend line. So this is another confirmation for us to know that this market is going to keep coming down. It broke that trend line, and possibly if you go to your small frame. Before then, look at this. Look at this. It broke that trend line, and at the same time broke a key level. Take note. Broke the trend line first and broke a key level as well, key structural level. So if you go to your lower time frame, let's see what's happening on there. Bring it closer. So you see, it broke out. This may be classified as a I might classify this as a retest because it broke and kind of did well. I would say this reset was just too deep, but it's all good. It's absolutely fine. Can classify this as a retest. So if you wanted to enter, you can enter at this retest. Then it will have drawn you down a bit for a couple of pips. So if you entered here, draw you down for 45 pips, but you know where it's going to. Yep, that's not a problem. If you miss that one, you enter when it got another pullback somewhere around here, you know, and you're still riding. So right now, I anticipate this to drop back to this point. So from where it is right now, if you trade this from where it is right now. If you look for, what I would say is look for a level. You know the rule. Look for a level on the smaller time frame to enter. You have to look for a level, because right now you missed that entry. Just look for a smaller level on the smaller time frame. Unfortunately, you can't really see much because what's it called now? You don't have enough data on the left unless you look or you scroll. Unless you scroll or you go to your trading view to see, or change colors. Yeah, colors would do. So this can be a level to look for. Yeah, that's level. That's a good level. Okay, so you can wait till this gets to this level, because that's the only level we found that is close. Otherwise, let me see if I go back a bit. What about this one? How many people is it touching? Okay. Let's see, what is it? Oh, okay, it's already broken that level. Oh, okay. You see what I'm doing? So I'm looking for levels, key levels, and why am I looking for those levels? There are places that price have gotten to, and because price got there, it's gonna go there again. So the only other level I can find is this one down here. Yep, this one down here, and it hasn't gotten there yet. So what am I looking for? I'm looking for it to get there, either reject or breakthrough. Once it breaks that level, what am I looking for again? I'm looking for a pullback, or a retest of that level. Excuse me, looking for a retest of that level for it to keep going down to where? To the level that I created. What level is that? The key demand zone. We'll do supply and demand sometime in the future. So that's where it's going to. So everything being equal, I should see me working out with another 200 pips, 270 pips of this move. I've already gotten 200 plus from here. I'm looking for further 200. So if it keeps coming down, this is taking me, I may be done for the entire month. I may not trade again the entire month, you know. So that's GBP AUD. We've looked at GBP CAD. You know, we talked about why this was a trade that we bought, and why it wasn't a bad trade. Yeah, definitely. We're all catching it. You know, now what I'm gonna do, I'm gonna try as much as possible to keep sending the charts out for these few pairs that we're really looking at. So I want us also to keep them in mind. You know, like I said, we don't need to be all over the place looking at the different pairs. Just pick one or two so you don't miss them, so that when they happen, you're there to trade them. You know, so this right now, GCAD is on a key demand zone. Fantastic trade. I know Adrian really milked this pair. You know, so it got here. So right now we are waiting for reaction to occur. And what kind of reaction are we waiting for? A rejection of this point. Yeah, waiting for rejection, and the rejection to take us back either up here or maybe somewhere around here. You know, some pullback or what have you. But whatever happens, I'm not really looking for the up of this pair. I'm not really looking to buy this pair right now. I'm looking for the sell. Why? Because it's close out. It's more easier for me to look for a sell, because I'm just going to wait for it to break this demand zone, and then I'll take it to the next demand zone. You know, I'm take it to the next demand zone, which would be here for another 200 plus pips, 217 pips. But if I bring this down to the smaller time frame, maybe I could find something to trade. Let's see, I got something to trade on the smaller time frame, the H. Well, you know how it is. You have to identify the key levels first and foremost, to know where the market is going to turn. Let me see. Yeah, the key levels, a little bit noisy, but still good. So if I want to do this, if I wanted to trade this, one way I can do this is to trend this out. Can trend this out. If that's too steep, maybe bring it to this. So I can trend this out. If I'm looking for a buy here, yeah, this is something I can do. Either that, yeah, I can do that, or I can use my support and resistance lines to find out the key levels on the smaller time frame. You know, why am I identifying key levels again? Because they can offer me an opportunity to enter the market, can offer me an opportunity to take profit, it can offer me a place to put my stop loss at. So these are all opportunities for me to buy this market. So what I'm just waiting for this rejection to occur and for this guy to come up. Let me blow that up. I'm waiting for this rejection to occur. I have a lot of lines all over the place. I'm going to delete. I think it would. Let me leave that those lines because they are lines that I'm going to need since I'm going to take this trade again. But what I'm trying to explain is this. So what I'm waiting for this to reject here. Then I'm waiting for it to come in and break this zone that I've just created, this level that I've just created. Retest this level. That's 1.79141. That was 1.74194. I'm waiting for it to break that level, then retest that level, then I'll keep buying. I'll buy it to this next level, wait for that to break and retest, then I'll buy it to this next level. If I'm anticipating it coming back to this level, that is. Otherwise, I'm just going to wait for it to come back to this level, then sell it back down. Or that's one way. Another thing I can do is to wait for it because as you can see, let me bring this and you can see what's happening here. The trend line drop, trend line drop, trend line drop. Yep. So what are we waiting for? It to come back to that trend line. So if it comes back to that trend line, you can sell again back down, but that's scalping because that's how many pips are you probably looking for? Yeah, about 40, 50 pips. So if it comes back to that trend line, you sell again back down. But if it breaks that trend line, you have to buy. But then be careful, there are levels. Wait till it is clear of every level because price would always turn at or have reaction at levels, either break it or turn at that level. So put that into consideration. If you're going to trade the trend line, wait for it to come back, either touch the trend line, then you sell back down, or you wait for it to break this trend line, retest, then buy to the upside. But careful of this particular 1.4701. Unless you wait for it to cross that retest, then you sell it to this upper trend or upper resistance line for a whooping 60 pips, 70 pips. Yep. But if it breaks that, you're going to the top. This is where you're going to. So that's GBP CAD. What else am I looking at? There's another good move. Same thing. Up. Identify the up. Identify where structure is. Break, retest, drop. Broke here, retested, couldn't break, then broke it. And since it broke, I'm pretty sure it's probably going to come back and retest it or something. If it doesn't, because why do I think so? It did something like that here. It broke, then came back and retested. But if that doesn't happen, because if you notice what happened here, it broke it came back and retested. So maybe this might be coming down. So that's one thing to also look out for. So also look out for this guy to come down from here right now to this level. So how many pips is that? From where it is right now, that's NZD USD, 40 pips, 60 pips. I'm not really looking for that there, unless it comes down. Yeah, absolutely. We looked at a number of pairs this week. I'm telling you, it's going to be really good. It's going to be really, really good. So this guy, if it breaks out, that's our one. This is our trade right here. But bear in mind, when you go to your small time frame, you see these levels more clearly. It may not come in one day down there. That's one thing you have to put into consideration. Anytime I'm looking at daily H4, I'm not looking at to take profit, to TP the same day. Take all my target the same day. I may need to hold the trade for a day or two, for me to see the entire move. Otherwise, I will be tempted to be jumping out of the market prematurely. That's why you put those levels in and then put your stop loss in profit to just watch it. And then if you put your stop loss in place, if the market hasn't gone to your stop loss, there's no point. You don't have any reason moving it. Leave it there. If you have identified stop loss for that place, leave it, let it stay, let the market come back. Sometimes it's clear to see that this is a bad trade, then you can take it out. But if there's no reason, it hasn't given you any reason to worry about your stop loss, just let it be. If it's still somewhere around here, it hasn't broken out of this place. Maybe your stop loss is say some place around here. Let's say your stop loss is here. And maybe you enter the market somewhere around here, and you saw it coming back up. It hasn't even come out of this zone, because the worst that can happen is that it would go shoot a yeah, I know it's something that we all do. It can shoot out of here, then throw a wick, and before you know it, it will drop back down. So if the market hasn't even gone to that level, yeah, then leave your stop loss. It's just pulling back. Like I always say, pullback is part of the game. It's going to happen. Pullback is going to happen. There's no way. Look at that move. Drops and drops. There's no way this market will keep dropping. It has to pull back. It has to at least give back maybe 28%, 38% or 50%. So you might even expect this market to do, well, this is where it's at right now. So you might expect this market to come back 50 pips, which is at a key level. So you might come back 50% to this key structure before dropping back down. So sometimes it might turn at 20 years, sometimes it might turn off. So that's something to also put into consideration. Market will always pull back. That was the giant move drop, so that was a giant move. Let's see what happened in this giant shoot up. What did it do? You see, it came back about 50% as well. Came back about 50%. So it will always come back and do some form of reaction. But if it breaks down, if it comes here and touches and breaks down, that is your move. You can sell, can keep selling. Just keep selling. Sell it to the next level. What else? Okay. Okay, I'm just going to look at this one, then I'll stop. I'm just going to look at this one, then I'll stop. Every other one we'll look at after sessions if you have any questions. Now, this is a good one. Euro Chef. This is what we call is it an ascending triangle or symmetrical triangle? Yeah, this is symmetrical triangle. Symmetrical because you have that and you have this. And good thing it is between two lines. This is an example of what we saw in GBP AUD. This is sweet. So because if this kind of breaks out to the top, we're buying. If it comes down to the bottom, we're selling. And now there is an example of symmetrical triangle. We know symmetrical triangle. We know what happens. It's a bullish continuation library. Okay, symmetrical triangle. Where are you? I didn't want this trade to be too long, but okay, this is an example of it. See? That's not the one I'm looking for. Where are you? I kind of shared that with somebody just recently. Let me see if I can find it. I'll go to there. Find it. Aha! This is an example of a symmetrical triangle. Yeah, something like this. And let me see if I find another one. So you can see the different levels. Okay. No, aha, that's the one I'm looking for. So this one, you can see it. So that's a symmetrical triangle. See, it's a touch. 1, 2. Okay, sorry, that's 1, 2, 3. On the fourth one, it broke out. So look at that. That's what we're trying to look out for. See, our TP, our target is the distance between here and here. So let's go back now. So this is what we're looking at. Increase that. So we see that 1, we see that 2. Why am I calling this 2? Why? Because there's a touch, a drop to the bottom of the triangle. A touch, but it never dropped. This never dropped, this never dropped. So all of this are classified as 1. The next one that dropped was back here. Then there's a jump again, and then they form to the top of the triangle. What is it? That's a 3. And then there's a drop here. So I'm anticipating this to break out soon. I'm anticipating this to break out soon. And it might break to the upside. I'm really looking for this to break out to the upside. If it breaks out to the upside, I could just jump in prematurely and then maybe pick out okay, I won't jump in prematurely. That's 30 pips. No, I'm gonna wait for this to break out. Clearly, I'm gonna clearly, because it's too easy to risk. I mean, the reward is too small, So that is what I'm waiting for. Waiting for that to come there, retest, And then even though it breaks out of the triangle, I'm not going to trade it. I'm going to wait for it to break out of the level and then go to this top. So this is like where I'm going to put in more, or let's see, if we measured it like we said, measure this, because it's supposed to be from here to here, right? Based on what we saw earlier. Top of the triangle to the base of the triangle. Okay, so TP, let me see. It's confusing. Okay, TP will be from where it breaks out. From where it breaks out will be our TP. So if it breaks out of where it is right now, well, our target will be here. Will be somewhere around here. Not too much. Not too much. How many pips? Because if I entered from here, not a good trade for me. 60 pips, not a good trade. Now, you remember my minimum pips per day. I should get at least 100 pips for every move I enter. 100 pips. But if I'm to trade this and it goes out, I'm going to look for my TP somewhere around here. If it breaks this level, that's where I'm going to. And again, remember, we're not just looking at measured move, we're also putting into consideration levels. So if I go to my higher time frames, look at what happened. Look at, for some of you that I showed this, look at that move. Look at that move. It dropped 2,000, almost 3,000. Let me see. Yep, dropped almost 3,000 pips. And what has the market been trying to do ever since 2015? It's been trying to correct this move. It's been going up and down, trying to correct it. And finally, has it gotten there? Let me see. What was the move? Was that 1,200, wasn't it? This one, 1,200. So, yep, it got there. It got there. So right now, 1,200. So maybe if it breaks out, it might just kick this 1,200 and then drop back. It may just do that. Why? Because it's finished correcting this giant move on the left-hand side. It's finished correcting it, which is what it was trying to do for the past 3 years. So it's probably corrected. After correcting, it may just drop or it may keep going up. But it's done what it's supposed to do. It's corrected it. Yep. It may go up a little bit more just to fill up this other space for another, how many pips? Another, 100 pips. It may just do that before dropping finally. But whatever be the case, we're not going to trade unless we get a good confirmation. Yeah. So that's that one. That's that one. So we're looking at this one. I'm looking at this pair as well. Eurochef. I'm looking at this pair. Not to trade it for myself, but to offer it out as trading opportunity for people as well. Because I've already identified the pairs that may be trading, USD CAD and USD Chef. These are my two pairs I may be looking at this week. So I'm really, I hope this breaks out, gives me something this week. If it doesn't, I'm sure this is going to give me something to trade. But don't be surprised if I change my mind and do this Euro Chef when it breaks out, because I think it's going to break out soon. If it breaks out to the downside, I'm really going to take it. But to the upside, I'll be a bit careful because it's really close to the correction point. And that, my friends, brings us to the end of this session. So if you have any question, we're going to give an opportunity for us to ask questions when I click recording stop. So thank you very much. I'll see you on the other side.